Hello, everybody. Welcome to the webinar. I'll just give this a few seconds to let everybody check in. I'll get started in just a minute. So welcome, everybody. Hey, Lars, you're welcome. Got Brant, Tyrone, welcome, guys. Tim, welcome. Mike, Wakar. So I'll give this another minute. Let everybody check in here. We've got people just actively entering now, 123 plus people. So that's phenomenal. Thank you. Joey, yep, and it's a beautiful day in Florida. A little warm, but it's always good. All right, give this another 15 seconds and we can get cracking. Before that, let me just put a strategy packet in the so I'm going to just put a PDF in the chat box, and I'm going to talk a little bit about the strategy that we employ in this PDF, the patterns, the philosophy, things of that nature. So you're free to download that. And why don't I get started? So welcome to the webinar. This is the first of a 3-day live trade execution webinar series. I guess I should start by apologizing. I had a little bit of a miscue with my team. I kind of didn't understand that I had this webinar set for yesterday, so I missed it. I was so involved in trading Tesla yesterday that probably lost my mind, and just so I apologize for that. And thanks for showing up on day 2, but hopefully we'll make it worth your while, and we'll talk about a lot of things. So this is a live 3-day webinar series. People always ask me if this is live. So I've subtitled this, How to Capitalize on Monster Moves in the Markets, and probably more importantly, how to avoid the market traps. My name is Mark Shawson, the Pattern Trader. So I want to thank you all for getting on this. We've got 150 plus participants, and some of those are our active members. Some of those have, names I recognize for many years now. We have thousands of members around the world, and somehow they never get sick of me, and they show up to all of these, webinars. So that's fantastic, because the market's always moving. It's always dynamic. We can always learn something. So for those of you who don't know me, just by way of a short introduction, I've been trading for, over 4 decades. I got my start as a young buck when I was, 18, 19, 20 years old. And really my introduction to the markets came twofold. So first off, I was at the time going to one of the best business schools in the country, the University of Southern California, USC, out in Los Angeles. And I was learning, accounting and macroeconomics, and I took an investment course, which really the principles were how to learn how to look at and break apart an investment based on what we call fundamental metrics. So if we're talking about a stock, we'd be looking at the price earnings ratio, or the inventory turnover, or the balance sheet, or the PE, or things of that nature. Look at the management. These are fundamental metrics where we're looking at, deep dive into the particular aspect of that company. If it's a commodity like cocoa, we would be looking at Ghana exports and imports, and balance of payments issues and things of that nature. And so this is how I was kind of learning how to appreciate and look at the financial markets. And then right around the same time, my dad was doing business with this investment banker. My dad was trying to find some money for a drive-through animal safari park. And that is still actually in existence today in America. It's called Lion Country Safari. And he found this investment banker by the name of Graham Loving. You couldn't make that name up. Graham had an eye patch out of his, over his eye, and just really looked like the role of a captain. So, by day, Graham was doing his investment banking, but he was also actively trading the commodities futures markets. Now, for those of you who don't know about commodities, these are anything from live hogs to pork bellies to soybean meal to soybeans, wheat, corn, orange juice futures, cocoa. He was actively trading 20 different markets at the same T-bond futures, gold, silver, platinum. And I was wondering how the heck could he, get to know one of these crazy markets, never mind trade 20 of them all up in the air at the same time. And so Graham was just looking at the price movements of all of these things. And he would basically say to me, Mark, I simply want to buy a market that's going up and sell a market that's going down. And to my very simple way of thinking, that really resonated with me. I'm a very aesthetic person. I see things very visually. And from the very early teachings of Graham Loving, what we call technical analysis, where all you're studying is price. You don't care about the news. You don't care about the earnings results. You don't care about anything but price. And you will see that, I make some enormous bets just looking at some squiggly lines in the market, nothing else. I don't care what Jay Powell's saying. Tomorrow, we've got a CPI report. This is a very important report on inflation tomorrow. All our monetary policies based on this, interest rates are based on the stock movements. So 8:30 tomorrow, there's going to be some fireworks in the markets, but I don't really care about that. To me, I look at the patterns and the price action. And then to me, news like CPI, should largely move the market in the direction that I'm anticipating. So there's going to be all kinds of fireworks tomorrow. It should be fun. So just to kind of give you an introduction of what I do, how I do it, probably the best way is just to share with you a couple of my trades. I'll share with you what I'm doing right now. I try and be very transparent. I'll show you my positions, what I've been doing. So for the last 7-8 months, I have been warning of an implosion in what I think is the biggest bubble market on the planet. And that's in the stock price of Tesla, ticker price TSLA. And I've got analysis going back to last year telling our members to short it at 1,200 and 1,000, and we're sitting at 700 today. So this was an email that went out January 18th of this year. So about 6 months ago, I was, observing the bear patterns in the market. So here we are, 30% lower than where we were 6 months ago. Now, how did I know that? Well, the patterns told me. This is all I look at. This is what my emails look like when it goes out every day. I, show what's going on the chart. I kind of draw up the trade, and then I explain what I'm looking at. So in this explanation, I said Tesla formed a head and shoulders bear price pattern. Now I'll go to the live chart of Tesla now and explain what a head and shoulders is and things of that nature. Penetration below the low of today's key reversal bar suggests a chance of a parabolic explosion and a move much lower from current levels. Now that was six months ago, and we're 30% lower. And I would hazard a guess if we were to meet 6 months from now, it'd be 30% lower or more than that from where we are now. And I said, I'm personally short and things of that nature. So here was in April, where now it dropped out of the sky, and I was shorting it at $876. And today we're at $700. So I have been shorting this thing all the way down from this 1,200 level. Now it hasn't been without enormous up moves and things of that nature, and I'll trade those too. But I just want to kind of give you a clue and an insight. This is what I've been saying for a long time. Probably I should back up and share. I don't have them in any particular order here. So this was in Tesla at $1,145. This was last November. So I started, calling this a parabolic implosion. That it was, really at the very beginning, I started seeing that this was going to crack. And I said, this is going to be a parabolic move lower. So 7 months ago at 11:45, oh, this was actually a buy. So it's actually looking to buy it to go up there. Let me just I got all of these out of order. So this is just kind of a flavor for what I've been telling our investors for quite a long time. So this goes all the way back to July of last year. So really 12 months, exactly a year ago. And I said a year ago, the stock market is over. And that was right before it peaked. But a lot of other stocks were already peaking way before this. I said, I get the feeling that the past 15-month meteoric rise in US stock indexes is over. And turned out to be pretty much. I said, I think there's going to be a wholesale destruction in IPOs like Coinbase, which was trading about $240 at the time, SPACs like QuantumScape that was at $140 and went to $7, commodities like lumber that went to 1600s, now 400, and a whole bunch of stocks. Bitcoin, which is probably 65 grand at this time, is now 20, and on and on. So, I said, I think we're going to see a significant downdraft in the US stock indexes over the next several months. And that was a year ago. So this is, what I've been saying this is kind of the format. This is what I looked at. I was saying sell ARK, the famous Cathie Woods, fraud. To me, she's a complete fraud. I was telling short this at 115. Right now, it's probably trading somewhere in the 40s. And so I started, going on the record with our members quite some time ago. And again, this was a year ago. And how, did I have this insight? I was just looking at the patterns that were available to everybody at that time. So, this was gold 2 weeks ago, and I'm going to go into gold a little bit too. I said short gold at 1800. I made a lot of money in gold and silver. Sorry, I got these emails kind of out of order here. And I'm just trying to find. So anyhow, that's kind of the flavor of what I do. So this is, the Tesla short analysis. And so yesterday when I was in our morning, we have a morning program called the Boiler Room, where I start looking at the markets in the pre-market session. Believe it or not, stocks are trading right now actively in the aftermarket, and there's very active trading in the pre-market. So I actually have a program in the morning where we start assessing and looking at trades before they happen in the regular session. And you can see I was shorting Tesla. I shorted 500 shares here at 760, 750, 737, 727, 747, 750, and all the way down. And right now it's at 700. So I shorted about 3,000 shares. I'm up over probably $100,000 on these trades. And, here is, what my account looks like right now. Came in short 3,100 shares of Tesla. That's a 2 million plus position. Now, I assure you, this is not a demo account. This is as real as a heart attack. I don't know if you could replicate this if you wanted to, but this is my own trading account. And it is a real live account. I'm also short some indexes going into tomorrow. I bought some puts on the QQQs, which is a bet on a lower market. So, CPI could go up, could go down, but I think that, on balance, we're going to go lower. I bought some calls, which is a bet on the upside in the stock called Schlumberger. And then I had a pretty big bet also short. You can see this minus sign, and it says short here. Short means it's a bet on the downside. You're betting on a decline. So a lot of people trade in the stock market through mutual funds or pensions or just even on their own with a purely buy and hold mentality, where they're always looking for things to go. And most people don't understand you can make a lot of money on the downside. Stocks and everything falls a lot further than they go up. I always say markets take a staircase up and an elevator down. So I very often bet on the downside of these things. And right now, my broker doesn't show me a P&L. It's quite frustrating, but I assure you I'm making quite a bit of money in these positions. This is a smaller account where I bought some calls on the SPXU. This is an inverse ETF. So it'll go up when the S&P goes down. So the S&P went down, and so this went up today, and I made about 50% on the bets that I made today. I was also short some Zoom in this account, and I was also long some Schlumberger call options. So, I trade in all the assets. I trade FX, I trade gold, I trade oil, I trade everything that moves. These were trades that I sent out to the Pattern Trader members last Thursday, or actually about 2 weeks ago, rather. So I will stay in a trade. So unlike most traders, most FX traders that are in and out for every 7 or 15 pips, I'm always looking at setups that are going to extend for bigger moves in the market. And to me, this is the only way that you can make money on a sustainable level. And we're all going to lose, but it's the quality of your winners versus the quality of your losers. And I try and make, my winners seismically bigger than my losers. And that way, I can have one winner for every 5 losers and still come out way ahead. It's a principle that most people don't really understand. So I'm looking for setups in the market that are going to translate to much bigger moves in the market. So I said on June 30th that this is XAU USD. That's a ticker symbol for spot gold. And there were a series of bear price patterns, double top here, rounding top here, that I was pointing out on the chart. We had this, what I call a coil, where the market was in this very tight coil, and any break out of that, it was going to come out like a bat out of hell. And that's exactly what it did. It was 1,800 2 weeks ago. It's now trading at 1,725. And you'll see that I've made a few bucks on this trade. This was also simultaneously a sell in silver. So I saw, so for the last 3-4 years, 2-3 years at least, since Corona, while we've been talking about this double-digit inflation and everybody has this expectation, that the metals were going to go higher, I've been a perma bear. I've always said they're going to go lower because it's not my opinion. I'm going to show you what I was watching at on the chart. So to me, it's very important to be very objective. And what I'm going to share with you in silver and gold especially, should get your attention in terms of the disconnect in the markets, because we've all learned for decades now that gold is a hedge against inflation. And now, in the last year, we've had the worst inflation in 40 years. So it would only stand to reason that, gold and silver should be much higher, but they're at 2-year lows. So why, so that's the thing. You have to watch what the market is telling you, not what you think. It's counterintuitive. So, at that time, when, inflation was running rampant, I said silver's formed long-term short and short-term double top bear price patterns on both the daily and the weekly charts, indicating this pair could be poised to go over a cliff. So on and on and on. And so that's the result. I've been short, gold here since the 1st of July. I've been short silver since the 21st, short gold since the 21st, and, making a few bucks on that call. I'm also short the New Zealand dollar versus the US dollar. So this is what I do in the markets. These are some other trades from, a few months back. I told our members to buy the dollar yen when it was at 117, and now it's at 138. It's 2,000 pips higher. I was also buying the euro yen, and that's what I made on the explosion in the yen pairs. So this is what I look for in the markets. So, I've talked about Tesla, I talked about gold. So I'm just going to now go to, what I saw on the charts and why I did those trades. So the whole purpose of the next couple of days is that I'm going to show you the thought process, the methodology that I use, and I overlay this on everything. I don't care if I'm trading the euro versus the yen, Zoom, call options, gold, silver, oil. I use everything what I'm showing you on, on these charts. So, while I'm doing this, people are going to ask, well, can you look at this and can you look at that? And so the purpose of this is not, I'm not going to go into all of these different things. I want to kind of convey a methodology, and we can look at, charts till, two dawns from now. But the whole purpose is I want to share with you a way of analyzing a chart so that you can overlay that on any chart. To me, it's just a function of price. So let me talk about Tesla first, since I raised it, since I have a pretty big position in it. So my objective is to take the bigger moves out of the market. So I am looking to hop aboard a trend or just a move and take a piece out of the middle. So, when these things put on these big trades, I just want to get a piece of the middle of seismic big moves. That's what I'm looking for. I'm not looking to dance in and out for $2 here and $5 there. I'm looking to take out the bigger moves. And in order to take out the bigger moves, you need to understand, what's going on. You need to understand the hand that you're playing here. So, it's kind of the old saying that if you're sitting at a poker table and you don't know who the sucker is, well, then the sucker is you. And so to me, it's just a sucker play to look at a 15-minute chart and try and carve $5 out of something, because you're not really seeing what's driving that thing. So when you peel back now and you take a look at the weekly movements of Tesla over 3 or 4 years, I can start putting together things, just by looking at this picture. Now, I think it's important to note that this is what we call a clean or a naked chart. So all I have on here is price and time. There are no volume, there's no moving averages, there's no MACD, there's no Bollinger Bands. There's nothing on here but a clean chart. And from this visual, from the trends and the patterns, try and carve out huge moves. Now, how do we do this? So again, markets are either usually, people would say, if, I ask, markets are usually going up, markets are usually going down, or there's a third phase where they could just be going sideways. But frankly, where I make all of my money is on the turn. So to me, there's 2 more phases of the market where the market's going down, it puts on a pattern and then reverses and goes the other way, or it goes up, puts on a pattern and goes the other way. So this is a market that was going down, that reversed, now went higher. This is a market that was going up, reversed, and went lower. So I will trade all of these price patterns except this. So remember, my objective is to take out the bigger pieces in the market. I'm looking for a move one way or another. I really don't want to get, caught up in these kind of things. I'll wait till the market resolves itself, it gets going, and then I'll take a piece out of that. So, I'm not looking to day trade or try and beat my broker to the punch. To me, that's a losing, kind of proposition. And to my mind, again, if you don't take the bigger moves out of the market and you get carved up in here, this is how you're going to lose your money very fast. So I look to take advantage of these bigger moves. You can see that we've been balled up in Tesla. It's not been easy in here. And so, I got short, right into this resistance, yesterday, right there, surmising that this thing was going to go lower. Now, why did I think it's going to go lower? It just looks like an even bet that this could go either way. Well, the bigger patterns, what I call the governing patterns. So sometimes we just see these random things and we just look, we look at this chart arbitrarily. But to me, there are certain patterns and price action that are at work here that is going to govern the price action in this stock next week, next month, and probably next year. So what I'm talking about is right up here, you have, I don't want to overcomplicate it or have this big fancy terminology, but technically it's called an Eve and Adam double top. An Eve because you have multiple attempts at this resistance, and the Adam is where you have the single attempt. But take away all the fancy jargon. This is a double top. Let me use another color. Where you drive to one price, you back off, you retest that price, and now you have this M top. So now this is the kiss of death. This is what's called a reversal pattern. So now by definition of a reversal means that whatever this was, now this is going to get thrown into reverse. And I don't think that that's going to end up being, hyperbolic or an exaggeration. Frankly, I think I'm wrong. I think it's going to go a little further. So it sounds crazy now, but I've learned never to doubt price. Price is a religion to me, and it is a discounting mechanism, meaning that price is ahead of the news. So when I was telling our members to short Tesla up here, this is when, the car maker was producing the most cars it was everything was great. But price was telling me that there was another story going on here. And price is the only truth. Price is the news, price is the truth. And so, if that wasn't enough, then we came up here, retested this area, put on another double top. And so this whole area is what I call a distribution. This is where the insiders and the smart guys are getting the puck out while they're handing it to you and telling you, an analyst report. Let me see if I still have this open. I don't. Actually, this is pretty. Let me see if I can find it. Here. So this is why, what I try and impart is that we need to do our own thinking, or at the very least, not trust the trusted voices out there. So this was, taken about 2-3 weeks ago, where you can see in the headlines here is that this Morgan Stanley analyst, now Morgan Stanley is no lightweight outfit. This analyst is probably paid millions of dollars a year for his fancy analysis that most of the public is buying into. And he was kind enough to reduce his target in Tesla from like 1,300 to 1,200. And you can see the disconnect here where Tesla is trading at $700. And if this guy thinks that it's going to $1,200, he's dreaming. So this is what you see. This is what I see on TV all day long. These guys are either crooks or they're stupid. But, what I try and, inform our members is to be able to, look at the markets in a way that allows us to think for ourselves. I always tell my son, the greatest asset, especially in this world, is to be able to think critically, because there is no shortage of bullshit that's coming at us, from every which way. And if you don't know how to sort out the real from the other, then you're going to be lost in everything. And so this to me is, let me just kind of back out of some of this noise. It's, so now this whole thing visually looks like, again, one big, there's one top, there's the other. So if we draw it this way, you had one peak, you back off to a low, you hit the other peak, and now you've got this neckline. And a neckline is simply a line that is drawn that confirms the pattern. So sometimes we see these patterns. Sometimes we think we see, double tops in the markets all the time. But then these markets, they lay a trap. You can see that this didn't quite come to the neckline. And this is the trap that the market will lay. It came, but you can see there's a little space between the low of that bar and the neckline. Whereas you can see, we have come through the neckline here. And so the market throws us patterns all the time, and we look for ways to confirm what we're looking at. And when it thrusts through what we call the neckline, it then confirms that this is a big bad double top. Now, that being said, tops take a long time to form. Whatever we see over here that took weeks and months to form, you could have some of this stuff over here. But this is the thing to keep an eye on so that I know it's over. So every time the market rallies like it did last week, I just simply sell into that. And I've just made a small fortune shorting the stock. And I think there's quite a bit left. So you can see we're in this now very concentrated, what I call inside bar coil. So what I mean by an inside bar is that you can see that all of these trading ranges for the last 1, 2, 3, 4, 5, 6, 7 weeks, all of these trading ranges are largely within the high and low of this guy right there. So really what we are doing is building a coil. To me, this is just energy. I think the market's in terms of energy, right? So it's building energy. And now we have to determine, is the energy going to break out that way, or is it going to break out that way? And so then I defer to what the governing pattern. So this double top to me is going to govern or dictate how this stock goes well into the future. And that's probably a representation pretty close to what it'll look like. So how do I know that? Well, this tells me that. That's my cheat sheet. That's trading for dummies. And so, I just use these patterns like a weapon to, just carve out just untold, fortunes out of the market. So that's, Tesla, and that's what I'm looking at. And so within the pattern, then I look for what I call our insurance day bars. It's a little coin, a little phrase that I have. Later this week, I'll kind of offer you my book, which explains all of this a little bit better. So insurance bars. So why do I call it? So the way I've defined what an insurance in this, so this is a weekly chart. This means that each one of these price bars represents 1 week in time. And I look at a combination of patterns and price action. So the first definition of an insurance bar is what I call a key reversal. Key reversal. So every day or every week, you have a high, low, and close, right? You have a range. You have a high, low, and close. And either we can see a bar like this, or we can see a bar like this. And this is what I call a key reversal, where earlier in the week, prices, were stamped down. By the end of the week, closed at the high of the range. And so the buyers were in control. So I call it a key reversal, where it reversed lower and then closed on the high of the week. This is the opposite, where we went higher and then crashed and closed on the low of the week. So these are key reversals. So I look at these reversal bars within context of the trend or the pattern. So you can see right here, this guy right here, these markets point to where they want to go. This made a new high and closed on the very low. Now this is a weekly bar. This was probably $200. It went to over 1,200 and closed below 1,000. And that bar is telling you, it's pointing where prices are going. And if that was enough, here you got another one, and then you got another one. So every time the buyers try to push this thing above 1,100 or by 1,200, the sellers were in control by the end of the week. And all of these guys are pointing where they want to go. So I look at a combination of the patterns and the price action. Now, the second key reversal or an insurance bar is what I call an inside bar. And I'll explain this more in detail, over the week. So what does an inside bar look like? Or what does that mean? So you can see right here, the high of this bar and the low of this bar sits within the high and low of the previous bar. So this is an inside bar. This week sits inside the trading range of the previous week. Now, what that means to me is that this is a coil. This is picked a direction. It's kind of just churned, you know, the whole week up and down and up and up and up and down, building this energy. And now I surmise that the next energy is going to release out of there by virtue of the prior pattern. So here we have setting up this week, and we're only halfway through. We'll probably get a lot more clarification. So for right now, you know, if we were looking at this on Friday afternoon going into Monday, I would look at this as an inside bar, a coil, a storing of energy that to my mind is eventually going to release that way by virtue of the mega patterns. So I just look at different ways of setting up these trades. And then once I think I've got a trade, then I just let the market do all the work for me. So if I think this is an inside bar, I would just put a sell stop right underneath that, the low of that bar, and let that market pick me up. So it's really kind of a 4 or 5 step thing. Either is there a trend, or is there a reversal of trend? And it always has some historical precedent, a chart pattern that, you know, markets, when they turn, they tell us when they're going to turn by virtue of the patterns. So I look at either the trend or the chart pattern to determine where's this thing headed. Then once I determine that, I look for my insurance day bars, my key reversal, my inside. And then the 4th step is I put a buy stop in a market I want to buy, or a sell stop in a market I want to sell underneath the high and low of the daily or the weekly bars that I'm looking at. So pretty complicated, seems like a lot of things, but this is pretty simple. This is all I use to take a lot of money out of the markets. So I always get the question that Waqar is asking is, you know, I go to great lengths to say, yeah, I use monthly, weekly, daily. And then the first question I always get, Waqar, don't feel bad. Everybody asks this on every webinar. Can I use this method on a hourly or 5-minute chart? Because people just want to trade more. So it's not really exciting when I say, man, I wait till the end of the day and then I trade based on the daily, because that has given me so much more information, where the intraday is just a gamble. You know, why is everybody losing? Because they're gambling. They're trading on short-term charts and the outcome is just not big enough. So if you're trading on a short-term chart, Waqar, you're not seeing this pattern. You're just seeing, you know, 5 minutes of Tesla. So maybe that's enough. I see this double top on Tesla, but you know, this is a 30-minute chart of Tesla. I'm looking at it right now. Can you tell if it's going up or down on that? Can you see as much information on this chart, you know, than the weekly chart that I showed? This looks arbitrary. This is a pick'em. You know, this could go up or it could go down. This could be a double bottom down here, or this could be a double top up here. So it's right in the middle. So we have no information on this. So, you know, this is what happens. It gets going and you wonder why you get banged in the head, because the major trend is lower, but you can't see that on this trend. And this is not even a 5-minute bar. You know, people are looking at very short-term intervals, and so you can't see anything. You have a double bottom here, you have a double top here. So yes, I can see double bottoms and double tops all over the place. But will I have enough confidence to put on a $2 million trade as looking at something like this? No. So I use the long-term charts because my objectives are so much bigger. You know, if you're trading on a 5-minute chart, then, you know, you're only looking to carve out small objectives. You can't see this. You can't put yourself in a position to go on that kind of ride. And so, you know, that's what I'm looking for. I'm looking for pieces of the middle. Now, sometimes for weeks, we don't get that. But all I need is one of these plays and, you know, I'm good to go. So again, I'm trying to share a way of evaluating. I want, I don't, I'd like you to, whatever questions you might have had in my presentation. Let's see. Greg says, can the coil be an average bar or must it be narrow? It just, to me, it could be, it doesn't, there's no real definition. It's just it is a narrow range. And it usually sits within the previous range. So, we can see it all the time here. So you can see here's a little inside bar. Here's two inside bars, when they go inside, and then they explode after that. So you can see that right here, it looks very benign. Looks like nothing here. But if you just put a buy stop above here at 800, you would have had a ride to $1,200. Now that's better than, looking at a 5-minute chart trying to pick out the next $10. So, you see these inside bars all the time and key reversals. And then you can't just look at a key reversal in a vacuum and say, because, it's a key reversal. So that you can see this made a new low and close at the high. So that's a key reversal, but because of these big bear patterns, I didn't think we would translate from that into a sustainable, rally higher. You saw a key reversal on Friday. But to me, I was looking at this reversal here, right there and right there. So you can see once we got into this neighborhood, I was just shorting right there. I showed you all my shorts, 860, 850. I mean, sorry, 760, 750. That was right in here. That was right at the highs. And I was saying, okay, I'm going to risk to the high of that. So in my mind, this was my risk and that's my reward. And that's what I look for in the market. To me, trading is about risk and reward. Everything else is cocktail party conversation. I'm not checking other trades, Michael. What I really want to address are any questions you had to do with the analysis, because if you miss any, understanding of this, it doesn't really matter. We could go look at 1,000 charts. I do something on Fridays called the Weekly Underground, and I look at all the markets, and then our members in that, then ask me to go to any chart, and that's what we do on Fridays. And if you're interested in that, you should check that out. So Ryan says, do you set a take profit when you set up trades? So that's always a tricky discussion, Ryan, stop loss and take profit, because it always depends on where you are in the setup. Sometimes I'm just looking for a small move. Sometimes I'll do what I call a counter trend move, where, I will buy Tesla if there's a setup, knowing that this is the short term and this is the big term. So it depends on what I'm trying to get in the trade, how big a trade it is, and what my ambitions on that trade are. So, to me, long term, I think this thing is going to crash, but it's just a very difficult stock to get out, hold up. It crashes, goes up $150, crashes, goes up 150. But this game is going to be over, and the tighter it goes, next week we're going to have earnings in Tesla, and I can imagine we're going to start cracking, as early as late next week. So it depends where I'm getting into the trade, what my take profit is, what the market action is. So typically what I'll do is I'll get in a trade, and then, I think this is going lower. So I'll let it do its thing. And then if it kind of gives me a pattern that I feel a little squishy about, I might exit that pattern, let it do its thing, and then get back on it again. So the market is a very dynamic and fluid place. And I kind of let the market put me in. And then I also let the market try and tell me where, so you can see right here when it hit this area, this is, a trouble spot. There is a lot of history here. So whenever you get to a prior point of history, it doesn't usually just cut through there like a knife through butter. So you can see that there's a little bit of a ledge here. And then the next ledge is about 550. So my expectation is that we're going to come here, start trading here, and then bang here, and then, go like that. So the market, kind of goes in stages, goes down, puts on a stage here, goes down, puts on a stage here. It'll go down, put on a stage here, and it will keep going down. And I do not think that'll be an exaggeration. So I kind of look at where are the obstacles in the way. So to me, this was a huge resistance level up here. So I shorted right in there. I expect us to start trying to retest or drift down to this low 600 where it'll just bang around there. Then it'll get under here and probably come back into here. And then it'll make its way down to the 550. And then, we might get this. And this is how the markets trade. So I kind of keep my eye on where all these levels are. Sammy says, do you follow a specific set of instruments? No, I look at everything. I look at for a setup where I can make some money. I don't care what it is, a healthcare stock, an internet stock, euro, yen, gold. I'm agnostic. So I don't really give a crap what this says up here. I just look at this chart. It could be corn, could be natural gas, kind of looks like a natural gas chart. And I will trade it the same way. I'm just looking for patterns so to me, pattern translates to trajectory. So there will be no mystery when this thing starts falling out of bed. I will not be shocked. In fact, I started alerting our members right here last November that this thing was over. So pattern equals trajectory. So if I see a setup in anything, I'll trade that setup. Do you trade options? All the time. So I think I showed you, I've got some options in these triple Qs. This is a bet, so these are put options. So it's a bet that these things will decline below 280 by Friday. So it's a real gamble. And then I've got these Schlumberger call options, which I think, Schlumberger is really sold off. And I think that we could get a bit of a bounce. So you can see I bought these things for about 40 cents. And, if they go to 60 cents or 80 cents or, $1.20, I can make 3 times my money. So yeah, I play options. And to me, options are just a leverage bet on what I see. So if I, with options, you've got to be right. And then you've got to be right now. So options are about a very specific set of time. And I usually trade very close because the more you go out, the more expensive they are. So I'm always looking for an immediate move. So I bought these options in the SPXU. What is this? The SPXU. I bought call options at around 40 cents in the SPXU. And you can see that they're about 80 cents now. So this is a bet that if the SPXU goes up, the market's going to go down. So yeah, I make these bets all the time. If you want a recording, just send an email to support@thepatterntrader.com. So Dason says, how do you just, let me just see, I missed this here. Dason says, how do you decide to set a short below a recent low on a key reversal by the high? Well, I'm going to buy something that I think is going to go up, and I'm going to sell something that I think is going to go down. So for instance, the way Zoom closed today, I'm recommending to our members to sell short Zoom below the close of today. So today we had a mini inside bar in Zoom, and I'm short the stock. I actually shorted into a little bit of a opening rally here. I was on the boiler room this morning, and there may be some members on here now where, I just put a limit into this thing because, I just sold it right there. And the reason I did, Zoom's in a prolific downtrend. Zoom's at this, huge resistance level around this 120. And you can see this recent double top. So here's a pattern within a downtrend. Now, I'm looking at the pattern, and then here is what I call the inside bar. You can see that today's range was within the range of yesterday. Snuck a hair out, but basically it stayed within. So to me, this is the coil. So now I don't know if this is a double top. I want to confirm this. So what I would do is just sneak a sell order below the low. So today's low was like 106.90. You could put it at, like 106.50, or, there's a bit of a trap in here. There's some prices right there. So it needs to kind of go through there. So to me, the final confirmation is if it kind of goes through there, which is, I don't know, about 105. So I'm just looking at this, but, it just feels like we're going back into the trend. So tomorrow we're having a CPI, and the market's just going to get pushed in the direction that it was already going. I don't know the results of CPI. I don't know how the market's going to respond. But what I'm looking at Zoom is that, I see this setup. Now, here's the beauty. First off, I put a set and forget. I'll just put a sell stop there. And so, if tomorrow, the market opens and goes like a bat out of hell the other way, I'm not going to be filled. No harm, no foul. On the other hand, if tomorrow the market opens higher and starts failing and triggers me, then I'm automatically put it. So I don't have to watch a 15-minute crossover of the Bollinger Band and some magic expert advisor crossover. I just put my sell stop there and let the market put me in, and then just simply put a buy stop somewhere above today's high. So you kind of have a very known risk. So that's like a $3 risk for what could be a $50 upside. So to me, it's all about risk and reward. And what I try and do is find pockets where the risk is very small compared to the reward. Now you can see you got a bit of a shoulder here. So this thing could, mess around here like this. There's always some symmetry there, but this thing looks like it's going down. So that's how I set up, a trade. Doesn't matter. This is Zoom. The other one was Tesla, gold, doesn't matter. My question was in contact with the Tesla, and Natalia says, and I didn't see your question. I didn't see it, Natalia. There's a lot of people here. The questions go very quickly, so please don't assume that. I know that Vasu says, are SPY and QQQ also in double tops? Yes. So the SPY is the S&P. So I'll just leave it here because we could go on forever. I'll give you kind of my high vision of the markets, what I'm seeing in the markets, and then we'll pick it up tomorrow. So this is the S&P 500. This is a broad, diversified group of stocks. And you can see that the S&P was in a huge uptrend following COVID on Fed stimulus. And about this time last year, I was saying to our members, the party is over. And I mean probably permanently. So what I'm seeing are very, very ominous patterns in the stock market. So there's two patterns that converge here. One is a double top. And so the tops don't have to be symmetrical. You can see this top is a little bit lower than that. But when you stand back, I'm sure you'll agree that this looks like an M top. So to me, pattern equals trajectory. So there'd be no surprise tomorrow if following CPI, we drop out of bed. But we're in this area where, frankly, it could still re-challenge this. It could still do all kinds of stuff before it gets going. But the top has been put in. This top has been put in. So with the word top, even if we sneak back above 4,000, to short that thing. So, we're just in like kind of no man's land right now. We're just right in the middle of no man's land. But I think based on the patterns, we're going to go lower. So we've got this big, bad, ominous double top. Let me draw it a little bit nicer. Never know what color to use. So you can see this top, but then there's another pattern. And this is a pattern that I saw in gold for the last 4 years. It's called an ascending broadening price pattern. It's called an ascending broadening because throughout the pattern, prices are going higher. They start the pattern very narrow and then widen or broaden at the top. And, the cool thing is this is like having the newspaper from 3 months from now. because I can tell you exactly where this thing's going, at least to there. I think that's pretty conservative. 3,500 is pretty conservative. But we're going at least to there on, and I think we're going a lot lower. So you have the convergence of the double top and an ascending broadening price pattern. And, you know, I wouldn't be surprised to see this like that. I think what's going to happen is we'll come down, we'll probably get a second half rally, and then we're really going to go down. And I think people are going to lose all of their money, very simply. I think this is going to be a market that people have no clue how much destruction it's going to do. It's already, you know, had amazing destruction. So I said a few weeks ago, I said in February that people should protect their wealth because there's going to be the largest destruction of wealth you've ever seen. Now, I didn't think we were here. The S&P is only down 20%. But this is a chart that I picked off just 2 weeks ago. It says the largest destruction of wealth in modern history. This is where we are. We've lost $15 trillion because it combines both bond and stock market. We've never had a market like this where both the bond and stock market are coming down together. So I think people are literally going to get wiped out if they don't know what they're doing. So, you know, this is a high level of the S&P. You know, we're just, you know, going lower here. I think we've got lower to go. You can see that we're in this kind of channel here. And so I think that we're coming at least to somewhere there, somewhere in here, somewhere around 2019, you know, 32 to 34, maybe gets a bounce, and then we're going to go down big again. And that's what these charts tell you. So this is the NASDAQ, and same thing. Very, very bearish omens in the NASDAQ. Here's the double top. Here's kind of a short-term head and shoulders, if you will. You got the head and shoulders here. And if you really want to peel back, you know, this is probably a head and shoulders here. But, you know, again, this is just very, very negative stuff. So the neckline from here. So this is perfect. So you see prices usually break out of the neckline. Everybody gets excited. Then they come back, retest it. And when they make a new low, it tells you that this thing's going to keep going lower. So this thing can run, but it can't hide. So we could still mess around in here, but we're going lower. So I'm going to end it there, and you know, we'll pick up tomorrow. Oh, John, good to see you. So John Weaver's on every one of these broadcasts. John, I just don't know how you take so much punishment. Let's see. So Vasu says, what kind of long-term options can we take in this market? You know, that's up to you. I don't really want to talk about options. They're derivatives. They're very risky. I don't want to get sued. But, you know, what I do is I look at a chart and then, you know, try and say, okay, what is this chart telling me? You know, what is the trajectory? But it's with options, the problem is you got to be right about where it's going to go, and you got to be right in the time frame before those options expire. So they're like little grenades. I make a lot of money on them, but, you know, I've also lost a ton. The good thing about options is it limits your risk to whatever you put in there. So we'll talk a little bit about that tomorrow. But I'm going to get going here. I hope this was a good kind of session as an introduction, and we'll keep picking up the pieces. Vasu, you are welcome. Paul, you are the man. Thanks, everybody. I'll see you tomorrow. Thanks, Dwight.
All right, Mark. See you tomorrow.